Welcome everyone. This is one of the most anticipated webinars that Financial Wellness has had this semester. So I'm excited to share a lot of information with you and also our co-hosts who will also be sharing information with you. But before we get started, I would like to address a few housekeeping. First, everyone is in listening mode only. Second, questions will be responded to towards the end, but please make sure you enter your questions in the Q&A box because we do plan to answer the questions towards the end. And finally, this presentation is being recorded so you can actually review it on our TU webpage as well as our YouTube channel. Okay? Now, I would like to thank our sponsors. This presentation is, as I said, one of the most anticipated presentations because we're talking about something that a lot of people, whether you're young and old or old, a lot of individuals are actually wanting to know more information about car buying. So we have had some sponsors actually say, hey, we want to help you make this happen. Papa John's is one of them. So everyone who is attending, has attended this presentation will receive a free coupon for a free pizza. Okay, but here's the catch. In order for you to receive your coupon, you have to stay until the end of the presentation. And remember I said, and you have to complete a survey. Okay, you will receive a free coupon only if you stay till the end, as well as complete a survey. And also, Western Sun Federal Credit Union has generously sponsored us as well, not only with information, but also we have one of their very own co-hosting with us. For those of you who don't know me, I am Dr. Samara Barthelus, and I am a TU Financial Wellness Consultant. And TU is one of the things that, teaching is one of the things that I love. So being at TU, I am enjoying every minute of it. So teaching you how to manage your money is my thing. I was in the banking industry for almost 23 years. So I have seen quite a few individuals who have made some errors, some who have actually recovered from their errors, as well as those who are learning and stepping into the financial industry. Along with me, I have John Speaker, who is with Western Sun Federal Credit Union. John is a career marketing and advertising professional with over 35 years working with credit unions. He is currently the Vice President of Marketing and Business Development for Western Sun, which is a Broken Arrow-based credit union with more than $200 million in assets. He is a TU alum with a Bachelor of Science in Advertising, Public Relations, and Applied Communications. So John comes to us with a lot of advertising information, a lot of things that he can share, which dealerships actually use to their advantage. Okay, so before we get started, I would like for you to enter your response to this question in the Q&A box. What is the greatest fear associated with car buying, the car buying process? When you think about the car buying process, what is your greatest fear regarding it? So let me see some of your responses. Q&A. Okay, I see paying too much, getting a bad deal, debt, overpaying for a car, spending so much money, not well informed, being swindled. Yes, especially if you're a female. Yes, being swindled is definitely buying a lemon. Yes, yes. Long-term commitment, that is so true. Purchasing a vehicle for young adults is one of the major financial decisions that a lot of young people make. And a lot of times, because dealerships can tell whether or not you're a savvy car buyer, a lot of times they'll go ahead and, take advantage of you. If you know the right questions to ask, they'll somewhat back off. They'll still try, but they'll kind of back off a little. But if you don't know, then you're pretty much eating out of the palm of their hand. Next question. Next question. What would you say is the most important part of the car buying process? In the Q&A box, let me know your response. Okay, let's see. Getting a good deal. Let's see. Finding the right vehicle that meets your needs and that you can afford. Yes. Interest rates, down payment, legalities of the paperwork. Awesome. Very good responses. Very good responses. And I have to say this, there isn't one thing in particular that is more important than the other. Okay, if I have to group it all into one, I would definitely say knowing what you're doing. If you know what you're doing, you're ready to go out there and handle business. If you don't know what you're doing, chances are, yeah, you'll be taken advantage of, and that's not good at all. So let's move on. So our presentation today, this webinar, what we would like to do is basically break it into three parts. The first part is the money management aspect of it. What is your budget? How much can you truly afford? Okay, once you have that down, and once we have identified every factor that is associated with the car buying process, then we will move on to, before you step into the dealership, what do you need to know? And then once you're at the dealership, what is it that you should actually be in control of? Okay, now notice I said be in control of, because a lot of times when we walk into the dealership, the salesman is pretty much in control. And if you walk in looking clueless or not having done your own homework, then they will pretty much tell you and sell you what it is that they want based on how much commission that they want. Okay, let's get started. So as I mentioned, the first part of the presentation is basically budgeting for a car. You have to be able to know what it is that you can afford, okay? That includes knowing your credit and also the insurance process. A lot of times individuals go into the dealership and they say, I would like a car within this price range. That's good, they know that part, but that is not the only part of the long-term process of purchasing a car. There's the insurance factor, there's the interest rate factor, which includes knowing what your credit score is. Never go into a dealership and ask them what your credit score is. Be in control of the conversation all the way. Okay, so there are three money management steps. The first one is actually your budget. Now, it is recommended that when you actually, hopefully everyone has a budget. If you don't, after this presentation, sit down and start jotting down some stuff, okay? And I say jot down, and I'm not being funny. I'm actually being very serious. When it comes to setting goals, it's so important to have it on paper. If you have it on paper, you're more likely to stick to what you have on paper, okay? So the first thing you have to think about is your net income. Your net income, not your gross income, because your gross income taxes have not been taken out. Your net income is actually what you bring home. You can actually spend. So here's an example here. Let's say, for example, your net income is $32,750. What you do is you divide that by 12 for the 12 months, and it is recommended, in order for you to be financially sound, even if things get rocky with your budget later on, because we can never anticipate what will take place. But if you only budget for your car 10% of your total net income, then you should be okay. Okay, that is 10% at the very most, because some people will say, you know what, 10%, are you serious? I need more of a car than that. So at the most 15%. If you exceed 15%, chances are when things start, if anything crazy happens, you have a flat tire, or if you have a sick child or you get sick, you will not be able to recuperate. You'll end up being in the red and you'll end up being overdrawn. So here's the thing. I said, if you notice, I said monthly car budget, not monthly car payment, okay? So what is included? Your monthly car payment budget should include your monthly payment, your insurance, gas. Maintenance is not every month, but if you have a savings, then you can go ahead and actually use your savings whenever maintenance is needed. So your monthly car budget should not exceed 15%, and that should include monthly payment, insurance, and gas. Okay, so if you go into the dealership and they say, oh, what is your budget? You know, then you'll have something to think about, okay? Now, how do you determine how much car you can afford? There is a rule called the 24-10 rule. 20% down payment, 4-year term, and as I already mentioned, 10% of your net income. So what does that look like? Let's say you have a loan for $15,000, okay? Normally, a lot of individuals, they have not saved. So a lot of times they go to the dealership and they really don't have a down payment, but that won't be you after this presentation, okay? So they go to the dealership, $15,000, no down payment. So they end up financing $15,000. Let's say the interest rate is 5%. The term is 5 years. That means your payment will be $283, and the total interest rate that you will pay is $1,984. Okay, so $1,984 is the total interest that you will pay for the loan. But let's say you were a savvy buyer and you use the 24-10 rule. This is what will happen. $15,000 is the original amount of the vehicle or the agreement. $3,000, which is 20% down. So that means you are only financing $12,000. Let's play apples to apples for the interest rate. 5% is what the interest rate is. But remember, the rule is a 4-year term. So for 4 years, you only pay $276 for a monthly payment, okay? Now, if you look at it, even though you had more of a longer term, you paid more monthly for the 5 years. Now, total interest paid for 4 years is $1,265. So what's the difference? If you take into account the $276 that you would have saved by paying it off early, the total interest that you save for that 1 year that you did not finance is $3,312. Okay, so if you can put a down payment, if you can have a down payment, it's definitely something that you should consider. And here's the thing, it will cost you delayed gratification. So if you're willing to put some of your desires to the side for a little bit, for a short term, in order for you to reap long-term benefits, because one of you have said it is a long-term commitment, and I do agree. So if you're willing to forego instant gratification, you actually save in the long run, okay? Okay, second step is know what you want, because if you don't know what you want, the salesman will tell you what you want. So now that you actually know how much car you can afford, you want to get the best value for your money. So the first thing to do is, if you're like me and I'm really not into cars at all, I go to the well, before I was informed. I used to go into the dealership and just look around, and I looked quite confused. So the salesmen were probably looking at me like, oh, we have a live one. Okay, so, but now I'm informed, I know exactly what to do. First thing you do, since you know your budget, is this. Find out how much of a car that you can actually get. Look at the fuel efficiency. Look at the durability of the vehicle. And there are so many other factors that you can look into. Consumer Reports is one of the best and most reliable tools that you can use. Every year they put out in their magazine the most reliable vehicles, and even those that are considered junk that you will actually waste your money on. So for those of you who don't want to get a lemon, that was one of the responses we received, is make sure you consider Consumer Reports. Once you've identified the best car for your money, now you need to start shopping around. Car Gurus is one of the best resources because you can go online, cargurus.com, and look within a certain mile radius. You can even look out of state, several states, okay? And they'll let you know this state has the same car for this amount of money. And just as you see here, where it says great value, good deal, fair deal, or overpriced, they'll let you know whether the dealership or the individual who is selling the vehicle is giving you a fair price or overpricing their vehicle. So you'll always know exactly where you stand in terms of the price for the vehicle. And I recommend that you check several different areas as well. Resources as well. Car Gurus is one of them, but there are others out there. So let's say you know what car you want and you actually did a search and you've identified a vehicle that you want. Now what do you do? For those who are afraid of getting a lemon, what will happen is you go to Carfax.com. Once you go to Carfax.com, you actually put in the VIN number for the vehicle. Car Gurus will provide the VIN number for the vehicle that you have identified is a good deal for you. You go to Carfax, put in the VIN number, and it will tell you whether it's been in an accident, how many times it's been in an accident, how many owners it has had, and even the maintenance record. Did the owners keep good maintenance of the vehicle? And also, was it for commercial use or was it for personal use? It will also give you the odometer, the last odometer reading for the vehicle. Okay, and it can tell you as well. Over here, for example, you can see where it says $70. So it's telling you, you know what, you're getting a good deal. You're actually paying less, $70 less than what it's actually being advertised for. Okay, so first thing you do, find what car you want, that valuable car, a car that actually is of value that you can actually buy. Identify a location that has it, and then make sure it's not a piece of junk, okay? Now, in one of our previous lessons, we talked about your credit. Your credit is one of the most important things that you need to keep in mind because that is where the money maker is, okay, for dealerships. Now, in order for you to remain in control of the conversation, you have to know what your credit score is. There are several areas, several different places you can actually access your credit report for free. Annualcreditreport.com is one of them. And it provides you with the FICO score from TransUnion, Equifax, and Experian, all three credit reporting agencies. Now you can also utilize Credit Karma. Credit Karma, on the other hand, uses Vantage Score. And I touched on the difference between the two scores in the previous video, Credit 101. So if you missed that one, you can refer to it. Credit Karma also only provides credit scores from TransUnion and Equifax. So Annualcreditreport.com provides it from all three national credit unions, credit reporting agencies, but Credit Karma provides it to you for only two credit reporting agencies, national credit reporting agencies. There are some smaller ones, but we want to use the national credit reporting agencies. Now, remember as well, we talked about whenever you are applying for a loan, that's if you're not a cash payer, a cash buyer for your vehicle. Whenever you are applying for a loan, the lender is taking a risk by providing you with finance. Because especially with this market right now in our economy, a lot of individuals are in iffy situations. So what the lender will do is look at your past payment history and other factors. Other factors are your capacity. We talked about character. There's a lot of times we have conversations about character, but people do not include financial character, how you pay your bills. Lenders, on the other hand, look at that and say, okay, this is someone who is not a high risk because he or she has made continuous payment, no lates. Now, that's not to say if you run into a situation, then you're a bad person. If you can't pay, you simply can't pay, okay? But always communicate with the lender. But character is one, capacity, what is your debt load? Can you afford to add on additional debt? If that's something you can't do, then the lender would take that into consideration. And I believe John will cover that aspect of it. Also, capital, what is your present and future ability to pay your debts? Collateral, what will secure your loan? If you default on the loan, will there be something that we can get in return? Now, if you're applying for a car loan, the car will be the collateral. If you don't make your monthly payments, then your car will be repoed. And we've heard, pretty much a lot of us have heard stories of individuals while they're in bed, the repo man is towing away their vehicle. So that's why I say it's always good if you run into financial difficulties, call your lender, don't hide from them. Okay, and condition is a fairly new one, especially with this economy. Lenders will look and see, how do you plan to use your money, the money that we're lending you? In this case, it's for a car loan. And they'll also look at economic conditions. If you're applying for a personal loan, that will apply. But for a car loan, they'll know exactly how you plan to use the money. And here is what to expect. Once you know your credit score, this is what you can expect, excuse me, in terms of the score that you have. So if you are between 658, 719 for Vantage score, because FICO and Vantage are different. And if you notice too, they have a report card grading system, A, B, C, D, and F. So 658 through 719, the lender will think, you know what, you're approved for the loan and you're likely to be a very good customer. Okay, but if you move here, 601 through 657, that is where they'll, according to Vantage, because like I said, FICO is a little different. According to Vantage, they'll say that it's fair. The average credit score now is in the 600s, 630, 650, about that. So lenders will probably look and say, yeah, you know what, you're cool. 300 to 600 for Vantage, you're an F buyer. Okay. Now for FICO, here's the difference. 670, 739, you're considered a low risk buyer, and chances are you'll also get a good credit score. So once you get your credit score, come and look at this presentation, review this presentation, and see where you fall. Now, this is not the set in stone, okay? Because some lenders, theirs will vary depending on what the lending criteria is for them, okay? And John will touch on that in a little bit. Now, the next thing that you need to consider is insurance, because you have to insure your vehicle. You know what you're going to get, you purchase it, now you have to insure it. And one of the things that a lot of us don't do, and I know I did not do that prior to purchasing my vehicle, is call the insurance company and say, hey, I'm purchasing this car and I would like to know how much will it cost me to insure this vehicle. Because if it is a vehicle that is being financed, the state of Oklahoma requires that you have full coverage on the vehicle. Okay, so now that you know what vehicle you want, you know your credit score, call the insurance company and shop around, at least 3 or 4 of them. Ask them, what is it? This is the vehicle I plan on purchasing. What will be my rate? What will my monthly payment be? Prospective monthly payment be in order for me to take insurance out with you. Okay, now here are some things to consider. Your age is one of them. If you're young, expect your insurance rate to be high. If you have a low credit score, make sure, and I didn't say this on the previous slide, but when you are pulling your credit report, make sure you review your credit report to make sure to identify any discrepancies, anything that should not be on the credit report. Take care of it before you actually purchase a vehicle, because if the derogatory information stays on there, your credit score will increase. So you'll end up paying more for interest than your principal. So review your credit score. Don't just pull a copy of it and move on. Okay, so credit score is one of them. Driving history is definitely another one. If you get speeding tickets, DUIs, expect your credit, your insurance rate to be high. And there are some insurance companies, if you continually get DUI, speeding tickets, they will let you know, I'm sorry, but we can no longer insure you. Okay, so there are insurance companies, they specialize in insuring high-risk drivers. So you don't want that. So make sure you have everything in check, okay? Also, claims history, if you're the type who's always filing a claim, you're gonna raise some eyebrows where the insurance company will say, you know what, you're probably not the type of person we want to insure. Location is another one, because using me as an example, I remember, now I've been driving for what I consider to be eons. And I called my insurance company and I said, why is my insurance so high? And that is when I was informed that I live in one of the most accident-prone locations in the country. When she told me that, I said, what? In the country, not just in Tulsa? She said, no, in the country. So either I consider moving someplace else or I just accept the rate. But your location is another factor as well. Gender is also important. If you're young, males tend to get charged a higher rate than females, because insurance companies think, you know what, they tend to take more risk than females. So we're going to charge them just in case they're that type, you know, just in case statistics prove to be correct. The type of vehicle is another one. And also, how many years have you been driving? All of those are factors, and there may be a few more that I missed, but all of those are factors that play a role in your insurance rate. Okay? Now, time for you to answer some questions. Question number 1, dealerships prefer cash buyers over those who finance. True or false? Cash buyers over those who actually finance. I see true, I see false. Make less money, okay, false. Okay, let's see what the answer is. False. Okay, next question. When is it best to inform the dealership that you are a cash buyer or you have a down payment? Is it in the beginning of the sales process, during the sales process, or towards the end of the sales process? When do you think it's best? Okay. Some say beginning, they love the interest. Some say the end, during. Okay, I have more responses for the end. So let's click on end of the car buying process. Awesome. Wow, you all are pretty smart. Okay, last question. Where do dealerships make most of their profits? Is it the sale of vehicles, the ticket price of the vehicle, and that could be new vehicle or used vehicles, or is it finance and insurance? Where do you think they make most of their money? Finance and insurance, finance and insurance. Okay. There are quite a few smart people here. Finance and insurance. Awesome. Okay. All right. Now I will pass it on to you, John.
Okay, great. A lot of good information shared there. But before we roll up our sleeves and go buy a car, there's a couple of things that you really should consider is, what you'll need to do. The pre-approval process, that is very important. And I'm thinking if you take nothing else away from this, if you're going to go buy a car, new or used, get pre-approved before you hit the dealership. Another thing we're going to look at is buying versus leasing, which is best for you, and buying a new car versus a used car. Let's see how this works.
John, I'm sorry, your camera is not on. Did you want it to be like that, or just awesome? Okay, we're good to go.
We're good.
Much better, yes.
As I told you, a face for radio is what I have. Okay, I am not getting the screen to advance, so if you could help me out.
Okay, let's try this. Can you try it now?
All right, now we're working. Okay,
Awesome.
like I said, getting pre-approved is probably one of the most important things in the buying process. And what that does for you is it puts you in the driver's seat, so to speak, because you know how much you can spend, what your payment's going to be, and of course, what the interest rate is. And that gives you really a step up in the process, because you don't want to be looking at a $75,000 car when all you can afford is a $25,000 car. So knowing how much you can spend going in really helps you out. Pre-approval is really an easy process now, especially with a lot of the online banking products that credit unions and banks have. You can do it at home, probably takes about 10 minutes. What you're going to be asked is your income, your debts, and what lenders like is if you have what they call a debt to income ratio of about 45%. So you're not spending more than 45% of what your take home is. So they kind of look at that as a benchmark for your debt to income ratio. But like I said, income debts, they look at job history, length of term on your job, home address. They'll ask you if you've lived there less than 5 years, they'll ask, what was your previous address? They'll ask references. And these references are usually somebody you don't live with. So, parent, neighbor, friend. And then based on credit and all the above, your income, debt, all that, they may ask for a cosigner in the process after they review your application. And one of the important things to remember there is if you do get a cosigner, and a lot of people somehow miss this important fact, cosigner is guaranteeing the loan. If you don't make the payments, the institution is going to go find the cosigner and say, you need to make good on the payments. And a lot of folks just don't understand it. They say, well, I would just give an approval for them to get the loan. No, you're guaranteeing the loan if that individual that you co-signed for doesn't come through. Okay, let's see here. All right. Interest rates. Like I said, by getting pre-approved, you know what your interest rate's going to be. Here's some examples of what we use here at the credit union. Your credit score, like I said, 850 to down to 750, you're going to get our best rate, which right now is 2.99. You see, as your credit score goes down, the rate goes up, and that's because it's based on the risk to the lender. So, like I said, take care of your credit, you'll get the best rate you possibly can. All right, looking at, do I want to buy a new car or a used car? There are pros and cons to both of these. Something odd that has happened, not the first thing odd to happen during the pandemic, but one of the things with used automobiles, based on supply demand, the price of used automobiles has increased the last few months. And that's because the supply chain for new automobiles has been interrupted. So the dealers are not getting as many new ones as they're used to. So that drives the price of the used auto up. So it's good if you're trading your car in, and not so good if you're trying to buy one, because you'll probably pay a little more than you normally would, say, at this time last year. Now, downside of buying a new car is new cars traditionally lose like 20 to 25% of their value in the first year. That's just a given. You purchase your car, come back in 2 months and want to trade it in. You purchase it for $20,000. They're not going to give you $20,000 for it. They're going to say that's a used car and it's now only worth $15,000. So you're going to lose value that first year. A positive to buying a new car is you can get the warranty. Some offer 3-year, 36,000 miles, 4-year, 50,000 miles. I think Hyundai offers a 100,000-mile warranty. So that's a real benefit, is having that warranty. That's a cost savings to you if you happen to need repairs. A positive to buy a used car. Someone else already took that depreciation in value. So you are getting a better value by buying a 1 or 2-year-old automobile. So that's something to consider. Downside with used, you may, or there's no, or maybe a limited warranty with the vehicle. A lot of times, if it's within like 3 years old, it'll have the remainder of the manufacturer's warranty based on 36,000 miles, say. So if it's got 32,000, then you're going to have a 4,000-mile warranty on that car. A lot of used cars won't have a warranty with it, so you're going to look at paying some costs there if it happens to break down, or your maintenance cost. So that's kind of the pros and cons on buying a new versus a used. Now, do I buy or lease? Now, when leasing came out, it was really popular several years ago. Now, not so much. It does work in certain cases, usually for businesses. A lot of businesses that lease cars for their employees that don't drive a whole lot. So pros and cons of that is, on buying the car, yeah, you're going to have, say, a 4-year term where you're paying payments, but at the end of that 4 years, you're going to pay the car off, you're going to own it, you're going to have an asset. Where opposed to the lease, like an average lease is 36 months. So you're going to pay 36 months on that car, but at the end of 36 months, you don't own the car. You have 2 choices. You can either turn it back in, or you can purchase that car on the predetermined price that they shot you when you leased it originally. So if you decide to keep the car, you've paid on for 3 years, chances are you're buying it for, say, $15,000. You're going to have to get another 3 or 4 year loan to pay for that $15,000. So now you're up to 7 years paying on that same car. So not a good deal there. Again, you don't own the car. All you did was make payments, but you might have made a lower payment than you would if you bought the car, but there's a trade-off there. The really big deal with leasing is the mileage restrictions. If you drive a car a lot, leasing is not for you. The average lease is like 10,000 miles a year. So you're looking at 30,000 miles over the term that you have the car. If you go over those 30,000 miles, they're going to charge you 25 cents for each mile over those 30,000. So that'll add up quick. Not a good value there. The other downside to leasing is it's expensive up front. Most places will require like a $2,000 down payment. They'll want the first month payment up front. They'll also have like an average of $900, what they call an acquisition fee, just for doing the paperwork and allowing you to lease the car. There's also what they call an extended wear and tear clause in the lease that if you bring the car back and they think that you've abused it in some way, they can charge you extra to get it back up to the standard they think it ought to be. So the upfront cost on leasing really doesn't make it worth it. So, you know, some things to consider, but if at all possible, I would suggest you go ahead and buy that way. At the end of the day, you know, you've got the car. It's an asset, it's yours. And you can stop making payments after 36 months, right? Okay, now we've got all our financing figured out. We've figured out kind of what the car we want to get. Now we're going to go into the dealership. Now we're going to look at some traps to avoid, you know, some questions they're going to ask you to kind of direct you to what they want to do. And then again, end up with how the dealership makes a profit. Now here's some traps. The second thing, you know, I said, you get pre-approved. That's important. If you had to find something, be number 2 behind that, it's purchased based on the car price, not the payment. And that's one of the first traps. They're going to say, how much were you thinking about spending a month? Is your budget $300? Then they're going to back you into a car that they can get the $300 a month payment for. How they're going to do that is it may be a more expensive car than you wanted to buy or could afford, but they will lengthen the term of your financing contract. So it might have been you were paying 48 months. They may stretch it out to 60 months or 72 months to get that payment down to where you want. So that's not good for you financially. So before you go in, you know, we talked earlier about some of the ways to, you know, the Carfax and the different websites to look to find out values and stuff. Go to Edmunds.com or the Kelley Blue Book. Those have, you pull up the car, so you're looking at a Honda Civic. They have for the Tulsa market, a range. So if you're looking at a 2018, it'll show, you know, lowest somebody paid was $14,000, the highest somebody paid was $19,000, say the middle, you know, is $16,500. So that gives you a range of what you can consider a good deal and what others have paid. And that's really helpful when going in and doing your negotiation. And I guess finally, if they just can't get to your budget, or if it just doesn't feel right, walk away. There's no harm or shame in that. Just walking out of the dealership, I can't do it. I don't want to get straddled with a 5-year payment I can't afford. Chances are, if it was a good deal that you were presenting them, that they'll give you a call back in a day or two and say, hey, you still interested in that car? We can do what you want. And seen that happen more times than not. Now, how dealership makes money? Yeah, they like to sell cars, but where the real money is on the back end. Once you decide on your car, make your deal, then they say, well, you're going to have to, even though you're pre-approved with a bank or credit union, they say, you're going to have to sign some papers with our finance guy. That's when they take you into the office, and that's when they put the back end stuff. For example, gap insurance. What that is if you, say, buy a car for $20,000 and you end up wrecking it in a few months, the insurance company, they total your car, they will pay you the fair market value. Now, they may decide that's $15,000. So that leaves you with a $5,000 debt on a car you don't own, you can't drive. And what do? Well, the finance company is going to say you continue to pay until that $5,000 paid off. Gap insurance, what it does is it pays that $5,000. It makes up the difference between what the value of the car was that they gave you and how much you owed on it. So it's a valuable insurance, but the problem with it at a dealership is they may charge $800 for it, where the credit union or a bank may charge $299. So shop around for your gap insurance. Extended warranties are the same way. These are warranties in addition to, say, the 36,000 mile warranty you have on your car. They sell 3 or 4 different packages. And what happens there is as you increase the number of miles it covers and the deductible that you have on that, so does the price. So these packages may range from $1,300 to $2,500 at the dealership. Again, check your bank or credit union, because those same packages may be, you know, $800 as opposed to $1,300. But again, that's a profit center for the dealership. Interior conditioning, I throw that in because that's stuff like, okay, you've got cloth seats for $600. We'll put a treatment on it, a Scotch Guard, keep them looking new. You've got leather seats. We'll put a treatment on it to make the leather look new. We're going to put a clear coat on your paint job to make the paint look new for $1,400. Stuff you really don't need, but it's all profit to them. And finally, my favorite, the documentation fee. At the very end, when you're done buying the car, they go through everything, and at the very end it says documentation fee might be $50, might be $99, might be $399. That's printed right on the purchase order of the car. What that is they're charging you to provide you a title of the car you're buying. And some dealerships will negotiate that. Some there's the price, pay it. If you want the car, that's what it is. So don't like documentation fees, but they seem to be here to stay. And there's nothing that really your bank or credit union can do to help you with those. That's something you got to negotiate right at the dealership. Okay, negotiation tips. Avoid getting played. Let's go with our final tips to keep in mind. Never fall in love with a vehicle. What this is if your salesman senses that you're going to get that car no matter what price he shoots you, it's game over for you. He knows that you're in love with the car, you want it, and he will leverage that to the point of on price. You know, well, yeah, it's a very popular car. It's a red convertible, and I can sell that all day. If you want it, this is the price. I can't budge off of it. So if you do fall in love, don't let them know. Here's another important thing about cash or down payment until the finance phase. What you want to do is keep these two items separate. What you want to do is get a firm price on that car. And then after you agreed, I'm going to pay $15,000 for that car. Then you say, okay, I've got $3,000 cash to put down. And that will help you out. If you do that up front, they will manipulate the figures to a point where you don't know what you're paying for the car. You may be paying full price for the car, and you know, they didn't give you a whole lot on your trade, but in the paperwork, it's going to be difficult to figure out. So if you can keep your cash down payment separate from what I'm paying for that car, all the better for you. Avoid letting them know your payment goal. We discussed that earlier. They're going to find a way to make it. If you say I can afford $300 a month, they're going to find a car that they can put you in for $300 a month. And it may not be the best value for you. In the long run, you're going to get hurt by doing that, because like I said, they'll probably end up having to stretch the term to the point where you're going to be paying on that car long more than you want to. Avoid discussing trade-in before the financing phase. This is kind of like the cash down. You want to keep your trade separate from negotiation of the final price on the car. Again, I'm paying $15,000 for the car. Oh, by the way, I have a trade. What will you give me for a trade? So you know that you're starting at $15,000. And if he says, I'll give you 10 for your car, then you know, okay, I got a loan for $5,000. If you keep those two separate, that's how it's best to work that. Otherwise, your trade, you don't know if they really gave you 10,000, did they give you 5 and jack the price on the one you're buying up 5? So keep those two discussions separate. They'll try not to let you do that. You know, did you bring a trade? Well, I don't know. What's the price on my car? I'm interested in that. So if you can keep directing it back to, what am I paying for this car? And then after it's all said and done, say, okay, here's my trade. What are you going to give me? And finally, the fees. Tag, title, tax, license. excise tax, it's all in there. Those are extras and usually not handled at the dealership. This is when you go to register the car, get a tag for it. That's when you're going to pay the state of Oklahoma your federal excise tax, the title and the license fees. OK.gov, good website to go to. There are two different formulas that they go about figuring what your final fees are going to be. They can range from $800 on up, depending on how much you pay for the car, because I believe it's like 3.25% is one of the calculation figures on the purchase price of the car. So those can get quite expensive. A lot of times you can roll those fees into the price of the car. Let's see. Dr. B, you want to take the rest of it, or are we good here?
Okay, we wanted to share a few resources with you. Bankrate is one of them. The calculations I did for the total interest rate that we paid in my example, I was able to utilize Bankrate to provide that information. So if you ever want to know how much interest rate am I going to pay over a 4-year term or a 5-year term, or even longer, hopefully it's not longer, but just enter the amount that you'll be paying, the number of years, and it will actually give you the monthly payment as well as the interest, total interest that you'll pay for the life of the loan. Cash Course is actually a resource that we are providing through TU. So I provided a link, feel free to utilize that. BrightPath is a financial resource through Western Sun Federal Credit Union. And it actually provides education regarding all sorts of financial literacy aspects. So feel free to use that. The more resources you have, the better. And we talked about Kelley Blue Book as well as Edmund. So feel free to utilize those. So that way, if you need anything, you'll know exactly where to go. Now we are in, excuse me, the questioning phase. Okay, so if you have any questions, feel free to go ahead and post them. And I am looking right now to see if we have any. Okay, we have one question. Can you pay off a car earlier than your loan term? John, would you like to answer that?
Indeed. Make sure that your loan, and most loans at banks and credit unions are called simple interest, which means you only pay for the time you have borrowed the money. So if you're charged daily on interest, say, 35 cents a day or whatever. So if you pay off early, there's no penalty and you actually save money. So, if you were looking at, I'm going to pay $1,900 total interest over the life of the loan, if you pay off early, you wouldn't pay that $1,900. You're just paying for the time that you borrowed the money. So yeah, I would encourage you, if you can pay off early, do it.
Yeah. So make sure there isn't any early repayment penalty linked to it, to your loan. Next question is, what is the most common mistake that first-time car buyers experience? The most common mistake most first-time car buyers experience. I'll say for myself, and John, you can add your perspective as well. For myself, I walked in simply not knowing anything. I did not do my homework in terms of, first of all, what type of car do I want? I did not know my credit score. I just knew it was within a certain range. So I did not know my credit score. And I also did not know how long of a term I would need. So whenever the salesman said, or not so much the salesman, but the finance guy came in and said, hey, we'll give this to you. I sat there not really knowing how to negotiate and just said, okay. So simply not doing my homework, doing my homework. And another thing I will add is this. I ended up leaving the dealership thinking the amount that the finance guy quoted for my monthly payment is all I would pay. Now, we all know now that is not true. There's insurance that needs to be included. There's also gas that you'll need as well. So your car budget, my car budget actually increased, and I never really budgeted for an extra $100-something to add to my car for my car. And that does not include maintenance as well.
It seems that the common pitfall is buying more car than you can afford. You might be able to afford the $350 payment this month, but can you afford it the next 47 months? And people find out, 4 or 5 months into the term that, this was a really big payment and it's stretching me. So that's where it's important to get pre-approved and what the payment amount is where you're going in, because a lot of people get stuck in cars they really can't afford, and it makes for 5 years of grief for them.
Okay. Next question is there a best time of year to shop for a car? Did you get that?
I know that one. Well, there's actually 3 good times, so I can think of all 3 of them. The year-end clearance sales, when the new models are coming out and the old models are on the lot, and that's happening right now and will be for the next few months. So the 2020s are there, the 2021s are coming in, so they would like to move those so they can give a better discount on the 2020s than they would on the new cars coming in. Another deal is go during the weekday. It's slower at the dealership. You're apt to get a better deal during that period of time. It's not such a high pressure, because the weekends is when they sell. If you notice on TV at night, Wednesday, Thursday, Friday night, all you see are car dealers ads. That's because they want to get you in there on the weekend. That's when they really sell. So try to go during the weekday, and that could really benefit you. Like I said, model year closeouts on the weekend, and finally, number 3, go at the end of the month. The guys have quotas. They've got to move so many cars. If you go in there on the 29th, 30th, they're more apt to want a deal to make their quota for that month. There you go.
Okay. Next question is, do you recommend going to a credit union or bank first for a loan before going to the dealership?
Oh, let me think on that. Credit union. Credit unions are not for profit. We're owned by the membership, so we're able to offer probably a little better rate than most places. Banks traditionally are interested in the business side of banking. They want to lend to businesses, where credit unions have been more towards the individual. So like I said, our rate like now is 2.99, which is pretty good. Banks may offer a little higher. Either way, bank or credit union, you're going to be better off than taking what they're going to give you to dealership, because it's going to be more of a negotiation on that rate. Also, it's like, okay, hey, John, I think that you'll probably bite on 6% if I offer that to you, instead of the 4% that everybody else is getting. So, like I said, check the websites of your credit unions and banks, and they have some deals up there, and you'll know kind of what the interest rate is. But yeah, I would say, and sure, Western Sun, why not?
And I've actually worked for a bank for almost 23 years, and I do have to agree with John. Credit unions tend to have lower interest rates than banks. Credit unions are nonprofit, as he mentioned, and they refer to the individuals who do service, who use their facility, their services as members. We, in the banking industry, refer to them as customers, because they're for profit, they actually have to make money for their shareholders. So whatever profit is made, goes towards shareholders. So I would definitely use a credit union. I have seen their rates to be lower than banks. But you can do both. It's really up to you. Anything is better than the dealership. Anything. Next question is there a difference, is the only difference between a FICO score and Vantage score the scale it's graded on? I would say yes, but I would also add a lot of times you don't really know what you're kind of looking at because I remember looking at a Vantage score and I was thinking one way because it's not, if you looked at the chart that I had, you notice the scale was a little different in terms of the grading, where you would have considered a great creditor or a credit borrower. For Vantage score, it may not be that way. Yeah, so just look at the scale to see what they have. What they're trying to do now, what Vantage score is trying to do now is align the FICO score, their Vantage score with FICO score. That way it doesn't throw customers off, okay? Next question, we will take three more questions if you don't mind. Are there any strategies to use if the sales manager won't budge on price at all? Would you like to take that?
That's that walk away strategy. If they won't come to a price that you think is fair, then just thank them and get up and walk out. So that's, like I said, more times than not, you're going to get a call back within a few hours saying, hey, if you're still interested, come back in, we can do it. A lot of times they play the game where they will write down the price, circle it, let me go talk to the manager, come back and say, this is the best we can do. And it's not the best they can do. So yeah, that's the strategy. Go in knowing what you want to pay and what the car's worth is a good strategy also. And, you know, if you've done your homework when you hit the dealership, you shouldn't have any problems.
Okay, another question is, if the dealer asks, how much are you looking to pay? How should you respond without letting them know your payment goal?
I would say, just when they say, how much you looking to pay a month, said, you hedge your bet and say, I'm really not sure, but I'm interested in this 2020 CRV, this one right here, you know. So that gives them an idea of what you're looking for, but yeah, I don't say, I want to pay $300 a month. And I don't care what you get me as long as I pay $300 a month for the rest of my life, you know.
Yeah, and I've actually heard some people say as well that they prefer to talk to the finance person regarding financing information or even payment information. You can tell the salesman, you know, I'm interested in looking at what you have, knowing what you have, but in terms of payment and in terms of financing, I prefer to talk to whomever can make the final decision. The salesman
Back to the end of this deal, yeah.
Yeah, the salesman cannot really make decisions at all. It's the finance guy who pretty much runs the show. That's why you see the salesman running in and out of, you'll propose something and the salesman will say, well, let me go check and see if that can be approved. That lets you know the salesman is not in control. So you just let them know, you know, I would like to talk about payment and financing information with the individual who can actually sign off on it. Or you can say, I prefer to discuss that in an area where it's a closed space and it's just me and the decision maker. Okay, so
when he's running back and forth, the person he's running back and forth to has already pulled your credit, so they know
yes,
who they're dealing with, what they're dealing with, and how far they can push it.
Yes. Okay, we do have more questions, but I do not want to hold you all. What I will do is type in the responses and we can go ahead, we can proceed that way. But let me go ahead, John, I will go ahead and resume control. Let's see. And I wanted to reiterate, let's go back to the presentation. I wanted to remind everyone, well, first, the next money move is next Thursday, and we will be discussing renting versus buying, especially if you're about to graduate and you're wanting to know, am I making the right decision financially in terms of how I manage my money? We've all heard you're wasting your money if you're renting, but is renting the right thing for you right now? okay? And we will actually have a senior vice president from Arvest Bank discussing that with everyone next week. Now remember, in order for you to get your free pizza, you must complete the survey, okay? So your opinion really matters. We want to know if we have actually provided you with good information, if this is something you would like to see more of, if this is a relevant topic to you. So please complete the survey. We're not just trying to hold your pizza coupon, but your opinion really matters. Okay, all right. Thank you very much for your time. I hope to see you next week, but this has been a very insightful presentation to me, I know. But like I said, your opinion really matters, so please share. That way we'll know if this is something we should provide next time. Okay, well, until next Thursday, I hope you all the best week. Okay, thank you.